what are the key benefits of a members voluntary liquidation? So a members voluntary liquidation is a solvent liquidation, i.e. that the company has more than enough assets or cash to pay all the creditors in full, and then usually there's a distribution to the shareholders. So it's a solvent procedure. Now, typically people use a members voluntary liquidation for when that company is no longer viable because they've retired or they've got a business venture that they're working on, and this is no longer needed. Essentially, it's just sat there with a load of cash that they want to extract. In that scenario, there's two options really available. There's dissolution and members voluntary liquidation. Now, dissolution is cheaper and it is quicker. So obviously I can understand why people want to do that, but let's look at the key benefits of a members voluntary liquidation. So it's tax efficient. The distributions that are made in the members voluntary liquidation are treated as capital gains. It's not treated as income, so it's more tax efficient. So what you can do is you can ask your accountant, you can say, what will I save in tax if I were to put it into a members voluntary liquidation? And then look at the cost of putting it into a members voluntary liquidation. And as a rule of thumb, if your funds are more than 25 grand, then members voluntary liquidation is the smarter option. Okay, so members voluntary liquidation, it's tax efficient, but it also has its advantages above dissolution in that it's a legal process. And it shuts down everything correctly. Even if it's not a liability, a creditor, it's still what I do as my role as liquidator, I will go in and close it down properly. So there's less risk to the directors and to the shareholders because I deal with everything correctly and close it down. Whereas with dissolution, something could come out of the woodwork that you've forgotten about, or it's not been dealt with at all, and then you're in a lot of problems and it could end up costing you a lot more if you don't do it right the first time. So with the members voluntary liquidation, I deal with everything and I close it all down. Now, I mentioned dissolution is the quicker option. Members voluntary liquidation doesn't take that long. Once we've got all the information, it's usually between 5 to 10 business days for us to get all the paperwork ready, and then we can put it into liquidation. But we work obviously to the director's time frame as to when they want it to go into liquidation. So it's only a matter of days, couple of weeks really, to get it into liquidation. Now, once it's in liquidation and we've made the distribution to the shareholders, the liquidation will stay open for a long time, possibly 6 to 9 months. But the directors, shareholders aren't involved in that side of it. You go off and do what it was you were supposed to be doing, retiring or working on your new business venture. You go off and do all of that. Essentially, it's us dealing with people like HMRC, or if there's a pension, just closing everything down, and then we keep the members voluntary liquidation open for a few months just in case there's a creditor you forgot about or something comes out of the woodwork, and then we can deal with it. But it doesn't matter to you. So the time frames for the members voluntary liquidation is that it takes about, say, up to 2 weeks to get it into liquidation, and then 6 to 9 months for us to close the liquidation. But for the director shareholders, once you've paid your, you've received your distribution, you can then obviously go off and do what you were supposed to. So those are the benefits of a members voluntary liquidation. If you're unsure or just want to ask a few questions, please get in touch and we can discuss it. Okay, thank you.